last week.
Yep. Looks like we're good to go. All right, guys. So we looks like we've got the recording going. So yeah, welcome. Today is January 24th, and we've got Rocky down in Cuba, and so I'm going to be doing the screen sharing today since he's on limited internet. Let's just do a quick audio check. Rocky, you still there?
I am. 1, 2, 1, 2.
Can you guys all hear us? Awesome.
Can you hear me through this plume of cigar smoke?
I hear a bunch of tapping. All right, so let's go ahead and start with the markets. So no change since last week for the plan. Possibilities, probabilities, and plan. You can see last week we were doing class on the 17th. So price was basically the same price as today. And you can see, I mean, we're squeezing into the 3,500 zone. And a couple of days ago, we had a fast little spike through there. If you look at an hourly chart, so this is Bitstamp, it was basically, let me go down even further. Let's do like a 15-minute. Yeah, you can see, I mean, that was basically like stop clearing. Let me look at some of the other exchanges. I mean, it was only down there for a few minutes. It's like a pop and then a spike back up. So we're still definitely getting that kind of Bart Simpson price action, which is basically just like, we're tied in this range. 4K is kind of acting like a magnet. We've got resistance at 4,250, support here at 4,500. Volume has just been fading. And so what this is a sign of is just the fact that, A, we're in a bear market, right? And until there's some kind of buying frenzy or some kind of fundamental reason for people to just really start buying, I'm bearish longer term, right? But that doesn't mean we can't take bounce plays or, inverse head and shoulder, neckline breaks, stuff like that. So really, I'm just watching this area. And if we do get a 1, 2, 3, 4 breakdown through here, we talked about those zones. First major area around 2,800. Second major area is 2,000. So again, my bias is bearish in the kind of the short to medium term. And then until we have confirmation of a shift in the overall market conditions, that's just my kind of bias, right? And so these are the market conditions that are obviously the slowest for volatility, the slowest for volume, the slowest for trading opportunities, and that's okay, right? Market conditions shift back and forth. With that said, we did have one alt that popped off today. Rock, you want to go ahead and run us through this one?
Sure, sounds good. So some of you might remember last year I bought some Holo Holo chain when it was on IDEX at about 5 satoshis, calculated in ETH, but 5 satoshis, it was Bitcoin Satoshi. So that was before it actually hit Binance. So that once it hit Binance, I think it popped like a double or triple. But
was that here in September, you think?
Yeah, the first spike right there, that first little red candle.
Duh, I'm looking at the Binance chart. Okay.
Yeah, so I bought it at 5, then when it hit Binance, it was up a triple. It popped up to 24, but I told myself I was going to hold it as a longer term investment because I felt that it was just too early in the game for me to want to sell it because they haven't even released anything, right? So I'd set my first target at around 50 Satoshi. Obviously, I'd like to see new all-time high USD values. And if we do hit 50 Satoshi, then I'll sell about a quarter of my position, another quarter at 100, and then half I'm just going to hold to see if it ever pulls off something really stupid like Verge or whatnot. You never know, right?
Yeah. Do you know if there's a BT or a USD chart? I guess this one.
Don't think so, but
is that
trading
Holo?
Yeah, so let's see what that
Yeah,
looks
they
like.
calculated that. So yeah, so basically on a USD basis, it's still below that all-time high.
Yeah, it's kind of mid-range between those two. Nice little double bottom there. So
Yeah.
I need to I'll reassess when we're at 50 satoshis because I obviously need to see it break a new USD all-time high. But I'm
Yep.
generally gunning for about a 10x on my first target. And I know that kind of might sound a little bit greedy, but I think it's fundamentally, I think it's an interesting project, and I'm patient. Like I don't necessarily have to incur a bunch of taxable events by trading it in and out. I could just trade less, wait for it patiently to hit my targets. If it doesn't hit my targets, well then, I've got a nice crypto trinket souvenir for the grandchildren. and
Like literally a physical product. You want to talk about what the news was and what this is?
Yeah, so apparently they I think the recent bout of FOMO is based on this Medium article. Apparently they said they're going to meet their Q1 targets. So these are hollow ports. Basically what these are is they're just kind of like little nodes that you can rent out a bandwidth to the network. And what they're trying to create is like a decentralized internet, kind of similar to what Ethereum is trying to achieve, except that they don't have a blockchain. That's why it's called a hollow chain. It has like a similar like hash table structure as a blockchain, except it's a little bit more scalable and efficient in the sense that uh, traditional blockchains have been very bloated because every single person has to download and have an entire copy of every single transaction. Everyone else has the same ledger. But Holochain kind of does things a little bit differently where each node only keeps a copy of their own ledger instead of everyone else's. And they have it in their consensus rules that if a hacker tried to alter the software of their node, that the other nodes would be able to tell and cryptographically be able to verify that and secretly share that with the other nodes and possibly either block them out of the network or in something a little bit more benign, like let's say they have like a decentralized Twitter. I think they call it Clutter. I think they're calling it Clutter. I forget what they're calling it, but obviously, if you go over the character limit, you're not going to get banned from the network or whatnot. They'll just get rejected. So there's
Mm-hmm.
less benign use cases, but it's interesting. It seems like they're fairly on track with development. This is just could be a possible evolution in the blockchain space technology. And I I took a gander on it last year because the tech looked interesting enough. It looked different. The team looked interesting, and so I thought, okay, well, I'll take a stab and buy some as an investment and see where this takes me. They seem to have regular updates and so on and so forth, and so I'm kind of like diversified some of my investment risk by choosing what I consider trendsetters or projects that are actually trying to innovate and come up with something different instead of just straight up clone coins. So this is one of them. Obviously, Tezos is another, so on and so forth. So I still think it's very early in the game, similar to any other early tech like an Ethereum or whatnot. Obviously, like if a project does well, even though we're in a bear market, even though everything's correlated, in the next, and so it'll probably still be somewhat dependent on market cycles, unless it's possible for one or two markets to kind of break out in their own stratosphere. If something
Mm-hmm.
big happens, and obviously some things could buck the meta trend. But I think generally overall, I'll if it doesn't hit my price targets anytime soon, I'll just hold until the next cycle. And as long as they keep developing, and as long as they have proof of concept and get out of the test net, they're still in test net phase, then I think it can definitely go places. And I like the fact that from a psychological level, I like the fact that it's a low Satoshi coin, having been an avid Doge trader and having traded Doge from like 20 to 100 Satoshis many times. Verge, I mean, this would be the best case scenario. Obviously, I don't necessarily know if that'll ever happen, but Verge went from like a couple of like 2 Satoshis to, I don't know, 3,000 Satoshis or something absolutely ridiculous.
Yeah, basically less than a penny to about 30. So
Yeah, calculate the
whew,
percentage gains on that.
yeah, that's just insane.
And so this is like a low Satoshi coin. So this is
Yeah,
good,
3,000%.
good 3,000% there. And then Satoshi wise, it was even up pretty fairly high too. So
Yep.
a good way to multiply some Bitcoin. And then look, full retrace back into the gutter.
Yep.
So obviously, like this is the kind of, I don't know if Hollow, nothing's guaranteed, right? We don't know anything what the future is going to hold, but that's the kind of thing that I'm patiently waiting for. And the reason why I'm being patient and waiting for big moves like that, even if I have to wait a few years, is predominantly because we're kind of like in a very slow, choppy, grindy, not so volatile phase in that bear market. And it generally takes time for a new market cycle to develop. But when it does, you can certainly get some fairly drastic parabolic candles, right? Which we haven't really seen any this year or last year in anything because of the bear trend. And we often forget about what that feels like or what that looks like when we're so immersed in the bear trend, because it really tests our patience, right? It could last so long and people get agitated and annoyed about how long and choppy and grindy the bear trends can be. But, I'm going on the hypothesis that the crypto industry is still evolving. It's still a growing industry, and that there'll be other large projects besides just Bitcoin that'll take a seat at the table. I'm not necessarily a one coin person, even though I think Bitcoin's the dominant player. And so I scattered my my investments around what I thought would be the cream of the crop for the next cycle, and this happens to be one of them. So we'll see if this is just a pop and flop right now.
Yeah.
If it is, I mean, I'm still up. I'm not gonna shed a tear. And if it goes up higher, then it might force my hand to start taking profit a little bit sooner.
Yeah, Rock, I like what you said about, being patient during like the bear cycles. And here's what happens. Like when we go into a bear cycle, that's when a lot of things start to accumulate, right? And some of them dump off and die. Some of them like kind of flatline like this. And then the people that make the most money that I've seen are the ones that are early to the game, kind of right after things start to wake up, right? Like an example is like Ethereum at $1.50, right? Like it was very, very slow. It was very dead. But the people that were there that had the awareness and the patience, they're the ones that made a ton of money on Ethereum, right?
Yeah.
And then so this is kind of what I'm looking for now. And like, this is an example of the first sign of a coin waking up right now. I don't know if I would doubt that like Holo's going to do something similar to Ethereum. But what I like to see is like after an accumulation period, and this price action's really tough because it's like it's such a low Satoshi coin, right?
Yeah.
Like if you look at it, so it's the number one 24-hour volume, right? So it's traded about 17 million bucks, which is pretty good. And actually, let me take a look at the chart. So you can see that it's call it $100 million market cap, but it has a ton of coins, right? And that's why like it's such a low Satoshi thing. And so it's been in accumulation for a while. And like you said, Rock, like this could be a pop and flop, or it could be the sign of something bigger. So for me, Ernesto, you're asking like, am I buying any crypto or waiting? Like this is an example of something that I look for as kind of the first sign of waking up. And what I don't do typically is I don't chase and buy like right here.
Yeah.
Like I don't go, oh, hey, it's waking up. This is the first breakout. Let me buy. Because what happens a lot of times, and this happened with Ripple in the early days, like a lot, is you get
Yeah.
this pop and then it comes right back into the range, right?
Yeah, definitely.
So it's kind of a trap. What I look for is something like this, where it pops and say like, say by the end of the day it closes strong and look, we've got some volume coming in. Say it closes up above the range and then tomorrow, maybe we get a little more follow through. And then let's say over the next like week or two, it does something like this where it holds up and it pulls back to retest this breakout and then it actually holds and then starts to ramp up. What I'll do is something typically like this, where if I think that, okay, this is real, there's real volume, it's waking up, this is going to be a multi-week or a multi-month move, then kind of the first time that I'll buy is usually after this retest starts to pop up. That's really the earliest, and I'll go in maybe, I don't know, maybe 10% of a position size, something like that, maybe 10-20% of a position. And then what I'll do is I'll add on a confirmation of a breakout where I'll get even heavier. Maybe I'll go up to, 50% plus, right? And it depends on the coin, the fundamentals behind it, right? But the idea is that I don't necessarily care for, and look, again, I'm differentiating between an accumulation play, which is what Rocky did, and an actual trade where you can set risk and be disciplined with it. Because at this point, once you have confirmation, then you can set your risk to reward, right? You could do something like this, where say your average position or your average entry is there, and then you can set your risk behind that. And then say, you come up with some profit targets, which is difficult to do when you have a new market that is at all-time highs or just breaking out of its first accumulation. Like, you never know how high those coins can go. Like, if you would have told us back when, we were trading Ethereum around $1 to $5 that it would be $1,400, like, there's no technical analysis that you can do to come up with that number.
That $1,400 blew away my expectations.
Yeah. It's like, what do you do? 5,000 to 1? Like,
if you would have told me in 2015 that Ethereum would be worth 1,400 and a few years later, I remember when like $50 to $100 seemed like really nice.
Yeah. Yeah. So the point is like risk to reward is kind of difficult, but when you're getting in early, right, you just have to think and maybe ask the question like, I'm all over this chart. Ask something like, is this the start of a potentially multi-week or month or year move, right? Is this the start of a much bigger move where, like, in hindsight, this is going to look really, really small and there's going to be price action way off of the chart, right? Like that's the question. And that's why I don't mind being patient and I don't mind sitting through bear trends, because I know the people that do that, when things do start to wake up and when you get these breakouts that actually hold, that's where you get the biggest percentage gains, right? And the longer you wait for confirmation, the less your gains are, but usually the less trapped you get in certain things. That's why I'm just a fan of like waiting for that secondary breakout. I don't need to be first to the game. And that's why I wait for those things where I think it's going to be at least a trade that plays out over a couple of weeks or a couple of months, instead of like trying to day trade this crappy price action. Let me just get in something that's going to do a 5 or a 10x, right?
Absolutely. Like for me, when I first bought this, it was more of a fundamental play than a technical play because it was illiquid as shit on IDEX.
Yeah.
The chart was garbage. It's just, five Satoshis. I mean, how do you even chart that? And then my target was kind of arbitrary. I was like, all right, well, what's 10x from here? that's a good enough first target.
Yeah.
Like, will it go higher, lower? Who knows, right? But chances are, if it gets rolling, it might go higher. But that'll, I'll take at least if I sell a quarter of it on a 10x, then not only did I take all my risk capital, but I took out some profit too, which could also help compensate for other bags that might not be doing as well in the moment, right?
Yeah.
So some of
Yeah,
the
exactly.
winners, if they go nuts, they can help balance out the portfolio a little bit.
Yeah. Rave asked, how big is your full position in percentage? So I think you're asking like of my risk capital or like my trading portfolio. So of my like active trading capital, a full altcoin position for me is usually no more than like 5 to 10% of my overall trading portfolio. That can balloon up if a trade goes, has some really big moves, that can balloon up to 20, 30, 40%. But in those cases, I'm usually taking some profit and removing my cost basis and stuff like that. So
yeah, another cool thing with this is I'm actually interested when they do sell their hollow ports. I'm actually interested in buying one just to not only test it out, but to see if I can generate some passive income because you could set you're basically selling bandwidth to the network and you could set your own prices and stuff. I think it'll be kind of like based on free market consensus. So I'm definitely interested in crypto projects that have the ability to generate passive income. That's really where my focus is at.
Yep. Yeah, man. I mean, this isn't the time to do that, right? To explore, to get creative, to kind of figure out what the next wave is going to look like. And I guess that's actually a good time to kind of segue into the kind of the progress and development. Is everybody clear on that? Do you guys understand kind of what's happening with HOT or HOLO, however you want to say that, and also Bitcoin? Everybody clear on kind of the chart stuff?
Yeah, it seems like with Bitcoin at the moment, it seems like high leverage algos are kind of dominating right now, like especially on that 1 hour. Just these, if you go in the 1 hour, you just see these just ridiculous spikes that are just kind of like trapped.
Yeah, that's exactly what it is. I mean, this is classic stuff, guys. Where when you establish like this range, and then you get these like spikes above and below. All that is stop clearing, algorithms fighting each other, and rookies losing money. That's all that is.
Yeah, that's why I'm not playing the leverage game right now. Actually, the market kind of feels different than even when I was leverage trading. It didn't feel this choppy to me at the time.
Yeah. I mean, basically, guys, what it is, it's very simple. Like, you can drive yourself crazy trying to overthink this price action. All it is low volume consolidation. Like, the market's just trying to make up its mind. It's the same thing as like what was happening back here. And then we establish either a line of hope, right, where hodlers are just kind of hoping that this holds. You get the lower highs. The longer it takes to consolidate, typically the bigger the move when it breaks, right? So that's another reason why I don't mind waiting through consolidation, because usually the longer the consolidation, the bigger the move after the break or the reversal.
Yeah, and thus far, not really much of a bounce play either. And if we do get one, it'll be like 3 months later.
Yeah.
Instead of 3 days.
Yep. Cool. So progress and development. I'm sure most of you guys saw this, that the, people have been pulling, or specifically this one ETF pulled their app. And, I saw, what was it? An interview with the manager or somebody, talking about, look, I mean, the government shut down. The SEC is probably not going to approve anything in the short term. So, I mean, to me, this really isn't big news. My thing is like, I don't care. I'm not going to listen day to day about the SEC ETF stuff until something big actually happens. It could be years. I doubt it would be like it was with gold, where it took like 20 years. They kind of know what they're doing now. But when this happens, it's obviously going to be huge for retail investors and traders. But I don't know, Rock, do you have anything else to say about this?
Yeah, I think technology moves fast. The industry grows fast. Even a week in crypto can be insanely fast compared to other industries, and that's because it is dealing with technology, and we know that the technology cycle, tends to double up every few years or whatnot. So this is tech and finance, and being on this frontier kind of reminds me. I'm reading this book right now, The Ascent of Money. I don't know if you've read it.
The Incentive of Money?
The Ascent.
Oh, The Ascent. No, I haven't heard of that one.
It's an interesting book. It's basically on the history of money.
Uh-huh.
It talks about the history of the bond markets, the history of the stock markets, money, stuff like that. Very interesting, and this kind of reminds me of all of that because it was all new and experimental. I mean, I tweeted something like, if you think shitcoins are bad, you should see the history of the bond market, right?
Yeah.
I mean, it's had such crazy stuff happening. Now, you got to take with a grain of salt. This guy's obviously very pro-banker. He's a Keynesian mainstream economist, but I like to see many perspectives.
Absolutely.
And his historical analysis on it is pretty on point.
Yeah.
So he talks about the creation of the first stock market in Holland, the first company, joint stock venture, the bond market, how bonds are created to finance wars, and so on and so forth. Very, very interesting stuff. How money moved from gold into the fractional reserve system that we have today. And
yeah, this book's right up my alley, man. I love reading anything about like the history of money, the history of finance, even if it's from people that you don't necessarily agree with. I mean, you're going to find good stuff in there, and you're going to at least understand the other side, right?
Absolutely.
Die-hard Keynesian or a die-hard, Austrian. Like the truth is somewhere in the middle.
It's true. We can't be so tunnel visioned that we fail to look at other perspectives or take in new information that might challenge some of our own perspectives, right? It's better to have a wider perspective. Even if one disagrees, it's good to see what your opposition believes.
Yeah, definitely. And, being in crypto, it's like if you don't enjoy this stuff, like it's going to be really boring. So why not really become interested in like the philosophy of money, right? Like think about it. It's like next to maybe religion, it's probably the most important thing in people's lives, right? Because it controls everything we do. And there's a battle right now between, the gold bugs, the Keynesians, the crypto hodlers, right? Like it's super interesting time in human history. So, all right, cool. Let's keep moving here. So, this popped today. Basically the FCA in the UK has, I don't know what happened, but they kind of clarified that, hey, listen, like ICOs might not be securities. And then Marco went on a Twitter rant. I kind of read through this. I'll post the link in the crypto news alerts for anybody that wants to read through this. Rock, did you have any takeaways from it? Oh, we may have lost Rocky. Let's see. Yeah. He's going to have to get another one of his Cuba internet cards. All right, cool. So we'll wait for him to get back. But basically that was the gist of it. The UK's version of the SEC basically says that utility tokens aren't securities. It looks like this isn't really something new, but it's interesting nonetheless. So if you guys want to read through that tweet storm, you can do that. I'll also post this link. Yeah. Also, I was curious, has anybody been approved and is anybody ready to actually start trading on tZERO yet? I've actually been having some issues with this. Kind of the big thing is They're looking to launch this week, I guess. I don't know when. I haven't seen anything as of like the past few hours.
Oh, that's cool.
Yeah.
So they're launching this week?
Yeah. That's what I was reading. And I've got a login. And just been waiting and kind of watching this. Let's see if they launched anything today.
Yeah, it's been they've been working on that for a while.
Yep.
I kind of like Patrick Byrne too. I think he's a bit of a pioneer entrepreneur.
Yeah, and look at that jacket. That's pretty sweet.
That's Matrix style, man. He just came out of fighting some friggin' horde.
Yeah. So they'll probably wait till 5 p.m. on Friday. We'll see.
Is there a token or a security token, anything linked with that project, or did he? I can't remember. Did he raise any funds?
Oh yeah. So Zach says they're waiting on KYC. My buddy works. Yeah. What do you mean, Zach? Because I haven't gotten any approvals or anything like that. Like, are they just working through all that stuff? I'm sure they got a flood. Yeah, so they issue, or I guess they're the first rollout of T0 is going to be the security tokens that they created. So, oh, they are backed up. Okay, that's what I figured it was.
Yeah, there's such innovators. I mean, I remember, what was it? Patrick Byrne in 2015. Didn't he put like the first corporate bond on the Bitcoin blockchain from his company? It was like $100 million.
He's definitely a pioneer. Yeah, so they had their STO, and then I guess what they're doing is releasing the tokens on the network with like a few other things. My guess is that liquidity is going to be real low and real slow for the first few months. I think it's just going to be a lot of like wait and see. And there might be some crashes due to that, like if everybody is dumb and they just try to sell at once. Or if there's lockup periods on these STOs, there might not be much happening at all. Zach says they want everyone to launch at the same time because they're using the government verification, which doesn't move fast. Oh, I wonder if the shutdown is actually affecting that.
Probably.
Yeah.
Wouldn't surprise me.
Interesting. Okay, cool. Well, that's one of the things that I'm looking forward to this week is just seeing how this goes. I'll probably do a video on it once I get in and get, the KYC and all that. I was actually having trouble even logging in today. It was weird. And then it seems like their servers went down. So I don't know. We'll see. But on another note, Joe Rogan talking about Bitcoin.
Oh, that's good. That's good publicity.
It was funny. I think he put up a Bitcoin address, and then he got like 5 Bitcoin or something.
Nice. Well, I gotta give the guy credit because he's shilling it at the lows instead of at the highs. So
yeah,
that's better than most other celebrity track records.
Yeah, and I don't even know what he said. I just saw this article and pulled it up. Fascinated, decentralized economy. Yeah, I gotta watch this. So, that's basically it. Pretty slow past couple of weeks. Price has really just been in like a super, super tight range, really about a 5% range.
Actually, we should kind of talk about that market sentiment wise, how like celebrity and media endorsements can mean different things for the markets in both a bull or a bear trend, right?
Mm-hmm.
Like, for example, at the highs, you saw like Katy Perry with their crypto clause and just like all these celebrities jumping on the Bitcoin or crypto bandwagon.
Yep.
And oftentimes, like when the markets are parabolic and high and we see stuff like that, we consider that market sentiment-wise to be a sell signal.
Yep.
Right? And the reason why it's a sell signal is because it's showing that the market is very saturated to the point where it's going to the periphery of people who like literally don't give a shit about crypto or decentralization, right? It's no longer in that niche of like hardcore community. It hit so widespread that it permeated a bit into the mainstream. And so when you see that, it's usually a top, but you have to really look at where the price action's at. And when the prices are lower, like at an accumulation or in a bear trend, sometimes the opposite can happen when you start to, if you get endorsements from media or celebrities at the lows, because all the sellers have already been pushed out and exhausted out of the markets, that can be enough of a catalyst to light a match and start a new wave, because then their followers start to jump on. Start to get on
I think a good example of that was in 2014. Like, I think it was somewhere through here. Tim Draper was when he bought the Silk Road coins.
Yeah.
I want to say it was either 400s or 600s. I want to say it was somewhere in here, but I remember specifically when he came. Oh, it was 600 mark. Yeah, somewhere around here. He came out and was basically like, "Hey, listen, I'm going all in on this. I'm going to buy all these coins." And I think he did. He bought like the whole lot, I believe. And I
like
was
40,000 or some coins or some crazy shit.
Yeah. I was actually talking to him at his office about this last year. And I said, man, I just got to tell you, like, when you did that, it gave me confidence to know that like accumulation was close because like, it was like through here, like this was like one of the most interesting times in crypto for me, was like this area right here. It also happened to be when I was traveling the world, like for the full year of 2014, I was traveling, and it was just like every week it was like negative news, right? It was like, oh, this exchange got hacked, or Mt. Gox issues, or somebody getting arrested, or something, just negative. And then when Tim Draper started talking about it, I was like, this is like the smartest VC in the world who's going all in on this. Like, there's something here. And particularly with the timing, right? Like, I had already understood that like Bitcoin was way better to trade and way better to invest in than some of the more competitive markets. But as far as timing goes, whenever you start to see like big players like that making big bets, that can be not perfect market timing, but it could be close. So that's kind of what I've been paying attention to and seeing, like, I think this time it's going to be a little more like when the next accumulation and phase 2, I think it's going to be more driven by like security tokens that are actually working and people actually are trading them and they have liquidity. I think that's going to be in part what's going to happen in the next cycle. And that's really hard to know for timing, but that's just one thing I'm looking at.
And it also shows like the patience of a value investor like him, right? Like he didn't nail the exact bottom. He put in a substantial amount of risk capital into that position, and he didn't sell on the first pop or on a double or a triple or a quadruple or whatever, right? It kind of, and he had a drawdown, right? He didn't nail the exact bottom. He had a drawdown and seemed relatively equanimous throughout the whole thing, just patient. And it paid off because, the millions that he put in at 600 were worth just exponentially more than that. I think they were worth billions at one point. So that just kind of shows like the different, and obviously like that longer term investor mindset is different than, just trading the 1 hour chart or even just swing trading the day chart type of thing. It's a different mindset. Obviously, he was probably going on a lot of fundamental analysis as well, and also probably it seems like a lot of value investors really base things on supply and demand as well.
Well, and I mean, I would say that he's not even really a traditional like value investor. He's he's a VC, he's early stage, right? So he's used to taking like big bets and then having like like complete losses, and also like some home runs that just make up for all those losses many times over. And,
for sure. I think he's a Tezos investor as well.
Oh, really? Yeah, I mean, he's a super smart guy, really nice, really humble, and just is like really driving a lot of innovation through like. It's interesting. If you guys have never been to Draper University, you should go check it out in Silicon Valley, because they do these things like called blockchain parties, where it's like a neighborhood block party, and they'll shut down like the whole main street in San Mateo. And last time I was out there, they had like a band and a lot of startups. Like the Factum guys are out there. We hung out, and I don't know. It's just really cool to see like how he's not just putting his money there, but he's actually like doing events and driving things. So,
and that's the interesting thing about money and the history of money. All that stuff is like, all money is experimental and is a human construct.
Mm-hmm.
Right? And this is just an evolution of that experimentation. Fractional reserve banking is experimentation. The bond markets, that's the one takeaway that I got from reading up on the history of it. And what's interesting with history is it can give us a good foundation to not only better assess the present, but to perhaps even look out into the future and where we could be going. And that we're still, even economically, global economy, like we take things for granted. Even the stock market, people just kind of assume that things are etched in stone, but we have monetary policies even today globally that are completely experimental.
Mm-hmm.
Right? And the U.S. equities market, like, how you're talking about index funds and how they typically on average give a return of 5 to 7% a year over the course of several hundred years. That's true for the U.S. equities market, but there's a lot of international equities markets that don't produce those returns. Actually, the U.S. is number one right now. I think the U.K. is only like 3%, somewhere negative. Obviously, Venezuela equities market is like minus 14% on average.
India's been on a rip.
Oh, yeah.
Yeah, since like the early 2000s. Yeah. I mean, that's the thing to think about, right? Is like all this is really just an experiment, and we only have, call it 100 or so years worth of like history to really look at like modern economic systems.
None of it's guaranteed.
Yeah,
we're all just creating these economies as we go along, and we're all participants in it.
Yep.
And with crypto, what's cool about it is it actually just gives each individual like us a little bit more granular control and influence over it, versus like how much influence are you and I going to have over, the IMF or something like that, right?
Yeah, exactly. I've got a question from Rave. What do you think about Swarm, another STO platform? So I've actually been doing due diligence on all of the major companies that are out there and compartmentalizing them and reading their email, newsletters, and figuring out who the people are behind the deals. I would say maybe in the next like 30 days, I'm going to be ready to come out with some like either like some hypotheses or some opinions about the space in general. So give me a few more weeks, and we'll do like a special class just looking at all these, from like Polymath and T0 and all this stuff. I'm still like spending several hours a day just doing research and trying to understand that. So when I'm ready, like we'll do like a really in-depth class, and I'll just give you like all my notes and opinions on all this stuff. So
that'd be cool.
Yeah. Yeah, man. So that's kind of where my head's been, is just really focused on the STO stuff, evaluating a lot of the tokens that these security token platforms are like working with. And again, it's still super, super early. I think over the next 1 to 2 quarters is going to be when a lot of these exchanges start trading, and we'll see what the response is. It might be better than expected. It might be slower than expected. We'll see. But I'm definitely, I want to be the one that's like at the forefront of everything, because I think there's going to be liquidity premiums on some of this stuff. There's going to be good trading opportunities, and I just love it. I just geek out on it. So,
Absolutely.
Yep.
We got one question. Is there any crypto being used in Cuba? Let's just say that just over the past couple of years, Cuba just got good internet.
Yeah.
So I'm sure there must be some people in Cuba who know or use crypto, but I don't think there's a big scene here. I could be mistaken, but I don't think there's a big scene here. You there's a lot of places you can't even use a credit card in Cuba. So like it's still a very cash heavy economy.
Yeah, I'm looking up. Let's see here.
They're in their own
Oh
little
yeah,
tiny
there's
bubble.
nothing on local bitcoins.
Yeah, they're in their own bubble. I mean, even their cars, like they have cars from the 50s that they preserve and they manufacture their own car parts, which is why they've been preserved so well. It's like you go to some place like you're in a little time machine going back to the 50s. So I'm going to take lots of pictures of the van and stuff tomorrow.
Yeah, dude. There's a post on Reddit. Uh, this is from about 9 months ago. I'll post a link. You guys can read this. Just talking about like the feasibility of Bitcoin in Cuba. Yeah, that's interesting. I haven't done any research in it either. Into it either.
And even some websites are blocked, probably similar to China.
Yeah.
So I have to use a VPN to use something like Spotify, for example, or even SoundCloud. I have to use a VPN for that.
Yeah.
But last time I was here, they didn't even have good internet at all. So the fact that I can get a little scratch card for $1 for an hour.
Yeah, I think that just happened a couple months ago?
Yeah, either a couple months or...
Yeah, this was the article that came out I remember seeing. Oh, this was just last month too.
Oh, really?
Yeah. Come on. Cuba rolling out mobile internet for the first time. Yeah, you should definitely take a picture of those cards. I'm kind of curious to see that.
Will do. Will do. In fact, next time I see you, I can give you one as a gift.
Hey, that'd be cool. Just in case I go there and get stuck.
If you actually, you know what? They've been turning back Americans because of Trump.
Oh yeah, no, I'd probably have to go through another country and yeah.
Yeah.
Yep. Okay, cool. Well, so just to kind of recap, guys, so nothing new on the probabilities, possibilities, and plan of Bitcoin. Still waiting for a move. Price has been dead flat from last week. We got HOT that popped off. I'm interested in that as a trade. I didn't personally accumulate any, but if we can get a 1, 2, 3, 4 above, what is this, 22 Satoshis? If we can get that to hold as support on a pullback, I'd be interested in that. And then just going to kind of watch the volume.
Yeah, volume will be a good thing to
because here's what can typically happen is like sometimes you'll get a coin like this where it's number one on the gainers list, either by, percent increase or 24-hour volume or something like that. But then the next day you'll see it right back down here with like,
especially in the bear market.
Exactly. Yeah. So that's kind of what I'm looking for is like, okay, is this going to hold up? If it's down big percentage, but it's still above that prior high, and it looks like volume is maintaining and it's ramping up, and this could go for like a multi-week or a multi-month move where I could double, triple, or more my money in less than say 60 to 90 days. That's really what I'm interested in. If not, if it just fades off, I'm like, okay, cool. It's a cool project. Maybe I'll buy one of your things or, accumulate if I get another low price opportunity. But other than that, Rock, you said your first target was 50?
Yeah, 50. And Ernesto brings up a really good point. He said if Bitcoin rolls over, it could get crushed, right? Like, will the rally be strong enough to buck the meta trend if Bitcoin were to break down? That's another risk too with any alt.
Yeah. I'm glad you brought that up because, obviously like in a bear market, everything pretty much tracks bear or Bitcoin unless there's some kind of outlier fundamental scenario. But for the most part, that's true. And also with a bull market, right? Like we see like alt seasons really get lifted as Bitcoin's going up, because like after Bitcoin makes a big run of say 20, 50 or higher percentage points, a lot of people, when they sell Bitcoin, a percentage of them, I don't know what the percentage is, but I would say a majority, maybe over 50%, don't just sell into USD. They'll actually look for other opportunities, right? They'll sell into Ethereum, or they'll buy, one of the other, top 50 or top 100 coins, looking to get even more exponential gains. So that's, that's why, like you said, Rock, I mean, the meta trend is so important. And, right now is just the time to be patient and be prepared. That's the biggest thing that a lot of people miss about trading, is like 90% of it is showing up and just being ready, both from a technical standpoint, a mental standpoint, being capitalized properly, right? If you show up and you're ready and you're not impatient, the odds of you making big bucks are there. But it's the people that chase trends, or they act emotionally, or they're just lazy and they don't prepare, they don't study. Those are the ones that miss out.
Yeah, absolutely. And if Bitcoin does go bull again, then one thing that we've seen at the beginning of 2017 is that a lot of, I would probably say, whales, large size traders, had used altcoins as a means to accumulate Bitcoin.
Mm-hmm.
In my experience, alts have been one of the best ways to accumulate Bitcoin. It's also one of the best ways to lose Bitcoin too, depending on which side of the coin you're at. But I've found, even for myself, I was able to accumulate more Bitcoin flipping alts than even trading Bitcoin alone, because, it's hard to 10x your Bitcoin trading Bitcoin alone unless one's using leverage, which obviously, in my opinion, I think leverage has a lot higher risk than flipping shitcoins, even though shitcoins are very volatile.
Yeah.
Leverage is like, hey, you're liquidated. Boom, it's over.
Yeah, and you can see that here with this is the total market cap excluding Bitcoin. So it's like when you get these altcoin booms, like we saw here, like April through May. And then what happened is, like, I know I did this, and Rock, I think you did a lot of this too, is you flip that back into Bitcoin. And then when Bitcoin keeps going up, and then you buy the dips, like that's how you just get these like stupid outsized returns, is when you have market conditions like that. And then on the downside is the time to either hedge or get net short, or buy, trade the bounce plays, right? But patience is like the biggest key. And like now that the market cycles are getting longer, things take even longer, but the moves are bigger. So it's like longer patience, bigger reward kind of mentality, I think.
Absolutely. I feel like it seems, especially on like social media and stuff, it seems like a lot of traders are really trying too hard right now.
Yeah.
You know what I mean? There's just trying to catch every little bump and move. And there's nothing wrong with that. Everyone's in a different phase, a different cycle. I think if traders want to do that, especially to build up experience, I think it's kind of good for new traders to trade more. And even if that means making a bunch of mistakes, because you learn from them faster and it builds up the experience.
Yeah, and make mistakes with smaller size.
Yeah, exactly.
Don't swing for the fences. Yeah, like everybody's going to make mistakes, and some people are, they learn the easy way, and some people are stubborn as hell like me, and we have to learn the hard way, right? But as long as you can stay in the game, right, survive then thrive.
Yeah, absolutely. And aside from some of the stuff I saw on the table for immediate trades, like Ethereum and stuff like that, if we do hit 5,600 to 6K, I will flip that back into USD and maybe use that to buy a dip and accumulate something else. But anything that I've invested in as an accumulation play, whether it's Holochain or whether it's Tezos, whether it's currently up right now or whether it's currently down, my minimum profit targets on any of those is a 10x. And that might sound like you know, in a bear trend or whatever, that might sound greedy and ridiculous. And maybe it's pipe dreaming. Maybe we'll never get another bull trend, and I'll just have all these ones and zeros in my wallet. But the reason why I'm thinking that way is because this bear trend is so drawn out, and it could take so much time to build into a new market cycle, a new bull market, that I don't want to just like blow all my ammo and just sell my bags I've been waiting so long for a reversal on the first pop. You know, like I need to see some serious profit on the table. That and just reducing taxable events, because let's say I have a coin, let's say it goes up 4x and stays relatively stable, doesn't go parabolic, it stays relatively stable. Well, I still retain the value of that coin just by holding it. It's not like the money has disappeared unless it does a full retrace and flops, which could also happen. But I just need, there needs to be enough money on the table in order for me to want to take some off the table. And that's just my investments. That's my investments. What I have specifically for trades for that 5,600 area, I will do some cleanup at that area, and then use that money and siphon it into more longer term investments.
Yeah.
Cold storage stuff. And I'm still, by the way, I still have money stuck on Quadriga. We haven't heard from them for over a week now.
Oh wow.
And I might end up taking a big L if that screws up. But it's weird too, because you know sometimes intuitively you get a sense like start pulling your money off exchanges. And I was just kind of getting that drive, and maybe this is why that's it. So hopefully that works out. But that would.
Do you have more fiat or Bitcoin on there?
It's all fiat.
Oh, okay. Well, then I don't know if I'd be too worried about that, right?
Well, the thing is that bank withdrawals aren't being processed right now.
That's right.
So it's, and crypto is a little bit slower. And if I want to convert into crypto, they've put limits on crypto.
Mm-hmm. Oh, they did that. Yeah, I saw that in the blog post, right?
And there's a 15 to 20% premium over our spot markets.
Mm-hmm.
So if you start moving size off the exchange in crypto, taking a 15 to 20% loss on all the fiat I've got on there would be a big kick. I mean, I would rather take that than a 100% loss.
Mm-hmm.
Choice. Now, granted, this is all risk capital that was gained through trading. It was one of several exchanges that I had parked money on. You know, I always realized, you know, don't keep money on exchanges that you can't afford to lose.
Yep.
We all know that in a bear trend, you're faced with a couple hard choices. You either spread some capital across exchanges, you pull it out into the bank, but then it makes it very slow to try to trade. It won't be as quick on the trigger. There might be opportunity costs there. Or you hold your own private keys and suffer through a 90% drawdown, right? So or you try to short maybe you hold your private keys, but then you say, okay, I'm going to short with leverage on BitMEX to hedge my portfolio, because obviously you got to use high leverage if you're going to short, because if you put too much coins on BitMEX, you could end up just losing them all in the liquidation. And I'm very the reason why I don't play that leverage game very much is because there's so many fluky flash crashes and flash spikes. Like you could get liquidated on an absolute bullshit move. The market could actually go in your favor. Like remember when BitMEX hit a $50,000?
Yeah.
Like imagine if you were short, and that was the right thing to do on the ETF.
Yeah.
That was the right thing to do. ETF rejection, short the market, right? Short the news. You would have been liquidated on a move that would have worked in your favor. Mm-hmm. Anybody would have. Let's say you only use like 1x leverage, or very low leverage, 2x. Oh, I'm going to be very modest, conservative in my leverage. If the price spikes up to 50K, chances are you're getting liquidated no matter how much leverage you use.
Yeah.
So that kind of shit happens, right?
Mm-hmm. And I'm Rock, just to kind of add to your point about like drawdowns and the risk management that's required in crypto. Talking about exchanges, talking about like you said, like random spikes if you're trading on leverage. Like to be in crypto, it requires a level of risk management mindset that is uncommon in other markets. For example, like using like Tim Draper's example of like when he bought, the Silk Road coins here, somewhere around here at like 600, call it $600. And then over the next couple of months, he had, think about this, he had call it a 75% drawdown. So if he bought, what was it, like 30,000 coins?
Yeah, that's insane.
30,000 times 600, so that's $18 million position size times, let's say, a 75% drawdown. That means he was down over $13 million on his position, right? And it would be really easy for a lot of people to freak out and just panic sell the bottom, right? But if you're going to be in crypto, like, you have to do that, especially if you're just accumulating. So then check this out. From 600, just going to the high. And he actually predicted, I believe, the 10K price point to the day, if I'm not mistaken.
He did.
Yeah.
He did. It was a very good prediction.
Yeah. So if we look at the upside, though, so your risk is 75% or 13 or 14 million bucks downside. Just think about what his mentality was on the upside here, right? Talking about like euphoria and stuff, from like the 600s up to even 10,000, right? That is a 1,400% return. So 1,800 or 18 million times 1,400%, $250 million, right? So
pretty good.
Yeah. So that was a quarter. And then like when it went to 20, he was up $500 million, assuming he didn't sell anything, right? So up to a $500 million gain. Yeah, not bad, right? But just think about that, guys. Like whenever you find yourself like in a trade that like has a drawdown or like something, like this is why the not just the technical side of risk management is so important, but the mental side of being able to actually hold through those drawdowns. I saw somebody trolling Rocky on Twitter about, what was it, Tezos?
Yeah.
And you can just tell when people obviously don't understand the risk management plays in crypto. Like, this is the mentality it requires. Like if you get in one of these super early coins with hardly any trading history and you freak out if you have a drawdown, you're doing it wrong. Your sizing is way off, And so some people are more aggressive than others, right? Like you might be saying, hey, I'm willing to swing for the fences and risk half of my risk capital on one trade, or you might be more conservative like me and try to manage it a little bit smaller and take 5 to 10% position sizes, right? And trade less and do swing trades, right? You just have to find, at the end of the day, like you can look at what we do and you can say, oh, okay, I kind of like that style, or I like that strategy, or I want to model that, or I want to take those types of accumulation plays or those types of shorts or breakouts or whatever, right? But at the end of the day, you have to do what you're going to be able to stick to mentally, right? That's why we talk about the mental side of this so much, because if you take a 75% drawdown and you panic sell, you lose 10 million bucks as opposed to making $500 million, right? Like that is one of the most extreme examples, but think about that. That's a real life example. And for somebody like Tim, who is a billionaire, like, even for him, I'm sure that was like kind of like, whoa, like this is a lot of money,
Yeah.
So I don't know, any chance that I see where there's like a good lesson about risk management or the mindset of this, I try to put out there because it's so important. If you get that wrong, nothing else is going to work.
Absolutely. And what's interesting and what I find cool too is that some students are performing better than I am in Tezos. Some of them didn't buy above $1 and some bought 40, 50 cents and don't even have that problem. It's still the project's still good, still early. I did go in a bit heavy above $1. I averaged down to bring my cost basis down because I'm kind of committed to it, but it's a large position for me. But that said, it's also risk capital I could afford to lose. I'm like, okay, big risk, big gain. In my mind, I have price targets of, $10 and $50, maybe even 100 if I'm lucky. Will it happen? Maybe. Future's unknown, but those are the targets in my head. I'm willing to hold. In the meantime, I'm getting 7% returns a year or 8% in Tezos.
Mm-hmm.
Paid in Tezos, so it's kind of self-accumulating. I've been following the thread. I think it's still so early in the game on a fundamental note. And, partially some of my partially some of the drawdown is also emotional too, is just pure boredom in the chop. Like I saw an interesting project fundamentally, but Bitcoin going sideways for months at 6K, you kind of get a little bit bored and you want to invest in something to feel productive. You want to put some of that fiat to work, right? So that was like just kind of like a part of the process. And
Rocky, I want to
to
commend you on like being transparent about that, right? Like, like we all make mistakes as traders, or we do things that at the time seem like the rational play, and then looking back in hindsight, like you learn something from it, and then you make adjustments going forward, right? Like that's really what trading and investing is like picking a strategy, sticking to it, and then looking back and learning from things that either work out or didn't work out. And so worst case for you, Tezos fails, you chalk it up as an angel investment that went bust, and then you have 5 or 10 other things that are working, and you're, over. That's why like any individual position or any single trade in the span of your trading and investing career doesn't really matter that much unless you risk so much that one position takes you out of the game. Then you're done.
Exactly. And that would be failing in risk management. And going back to this, like juggling risk management in crypto, like I participate in the Tezos ICO. That was the last ICO I participated in. I got in on the bonus, the 20% bonus. I paid about 42 cents for my initial Tezos. But my position in the ICO, even though it was a lower price, wasn't as big as the position I took above $1, because there was the risk that maybe they wouldn't deliver and I wouldn't see anything, right? And that risk was actually real because it was delayed for over a year before they actually launched. And so I was waiting patiently, and Tezos is being traded on HitBTC, these, I guess you could call them futures, pre-market. And I was just waiting. I wasn't really buying any of those. And then finally, when they launched the mainnet and it was on a decent enough exchange, which is Bitfinex, I opened up a Bitfinex account and I was like, well, the dollar mark is a lot lower than the pre-market price, which had a high of 10. Mainnet's out. Tech looks good. Still early. I'll start buying. The only thing I wouldn't change the fact that I bought some of the dollar. The only thing that I would change was the position sizing. I bought some, which is a good position size, and then again, emotional, got a little excited about it and started buying more. And but I didn't go all in, right? I not all in, like I didn't go all in on the size that I wanted on Tezos.
Yeah, you gave yourself room to average in, for sure, which is the right mentality for an accumulation play, right?
Exactly. I still had capital available deployed in the event that it dropped below the dollar mark.
Yeah.
And here we are.
Cool.
So
good lessons all around. This is why bear markets, I'm more conservative. And it's really just about like staying prepared, right? Because it's one thing to like, okay, like it's Monday, the first of the year, and I'm patient and I'm ready. And then like by 6 weeks into the year or whatever, you're like, oh, okay, well, I guess I'm just gonna be lazy and lose focus, right? That's where you miss opportunity. So that's why I'm being so diligent about the STO stuff. I know that's what's gonna be part of the next wave, and I definitely want to be on the forefront. Kind of like the mentality of like Ethereum at $1 or Dash at like, super cheap prices.
Exactly. You could have bought Ethereum at $1 when it hit the exchange,
Yep.
and you would have also had a 70% drawdown when it dropped to 40 cents.
That's true. I forgot about that. That's a really good point. Let me see. Was it
Poloniex.
Let me see if I have Polo.
Yeah, that was the first one I was listed on.
That's
I remember, you want to hear something nuts? I remember shorting it at $1 when it hit the exchange.
Oh, for real?
And I made money on that short.
Yeah, this was some of the most fun times. Yeah, because like, look at this. So you had the initial listing, it cracked, popped back up, and then it faded back. Yeah, like an 80% drawdown from that initial pop, not the top, but from the kind of the rebound.
Yeah, its own little mini bear trend.
Yep.
In an accumulation.
And if you look at, like, just kind of compare this to HOT, and again, I'm not saying that HOT is going to do this, but like kind of the same mentality. If you look at this chart, you're like, what is this junk, right? But then if you notice, like, okay, multi-month resistance here to buck. Oh, there's the breakout. That's the first sign. This was actually my first buy of Ethereum ever, was here in the low ones or the high ones. And then there you get another breakout. That's confirmation. Then you get the third breakout. And then before you know it, it's up 15x in a month or two.
And that was like a crazy bubble at the time for us.
Yeah.
Like, holy shit, and I remember when it hit like $22. That was like the craziest bull trend of 2016.
Yep.
Right? The hottest thing of 2016. And then the Dow hack, it's in a bear trend. And then it went into accumulation again. And then
yep.
Like out of the stratosphere on that.
Yeah, I want to say the Dow was like right in there somewhere. And then, look at this. Let's look at this this date range. From this kind of spike and crash, it was accumulation or just dead flat for almost a full year. And then went from 20 to like 2 something. Or no, yeah, 4. That was right. Went from 20 to 400 in a few months during the first alt boom of 2017. So that's why I say, like, doesn't matter what the chart looks like today, you never know what is right around the corner. It's like, yeah, and that's why, like, just staying prepared is so key.
Yeah, and a lot of the seasoned crypto vets who have been with us for several years, who have been in Bitcoin since some of the earlier days, they know this, right? None of this is anything new. We've been through this before. Imagine the patience. Let's say you were a Bitcoin investor who bought at like 10 cents. Imagine the patience you had to hold to hold it from 10 cents to, let's say, 20K.
Yeah.
Right? If you obviously you'd probably sell some along the way, but imagine if you still held some.
Yeah. Forget about even getting to 20K. Like, imagine if you woke up on this day. Like, I actually had a friend text me on this day, like when it was peaking up around 250. He's like, hey, dude, should I buy some Bitcoin? I'm like, yeah, it's going parabolic. You want to wait for phase blah, 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 blah. Sure enough.
That's why, like, I always tend to, like, I find there's like 2 really good plays in crypto. Either try to buy it as cheap as you can or wait for bullish momentum to come out and catch the breakouts, the early breakouts. Like, I find those are the 2.
Those are, if that's all you did, you're good. It's just the problem is people overthink it and they get impatient and they want to, get in their own way.
We tend to, people associate busyness with productivity.
Mm-hmm.
It's like, I got to keep busy. I'm going to chart every stupid tick on this chart and, try to scalp these 10% moves. And if that's someone's shtick, that's fine. If it works for you and you can make consistent profit doing that, that's fine. But I just, historically, I just find that being busy in crypto or charting or trading doesn't necessarily equate to more money or more productivity.
Yeah. Yeah.
Sometimes it's the opposite. Sometimes you could be sitting on the beach smoking cohibas in Cuba. And, in a few years, we'll do a check back in 2021 or whatever, and we'll see if this strategy panned out.
Yep. Yeah, David, exactly. I mean, that's the problem, right? Is getting yourself to understand that flat is a position too, and sometimes the best thing to do in the markets is nothing. Right? Like sometimes actually, I would say 9 out of 10 days for me, the best action to take is no action required, right? Like you have to get comfortable with not taking action, because not taking action in most cases means capital preservation.
Absolutely. Kat is my co-pilot saying breakouts don't seem like easy entries for me because I have gotten faked out so many times. It's really dependent on if you're in a bull or bear trend, right? All the kind of obviously all the breakouts in this recent bear trend over 2018 and 19, all of them were fake outs,
Mm-hmm.
right? Many of them were fake outs or they were just small dead cats.
Yep.
It makes a world of difference if you actually are in a bull trend and a real reversal. Because like in 2017, breakouts are hot. You know, like you could break out anything and you're popping money left, right, and center.
Yeah, that's why the top-down approach. That's why we in the boot camp we hammer this to death. Just and I'm simplifying it here, but talking about like first is the broad market conditions. Like, are you in a bull market? Are you in a bear market? What are the conditions? And then based on that, what are the appropriate setups? The trade setups for the market conditions, right? Like if you're trying to take breakouts when the market's making lower highs and every pop gets sold into, oh whoa, I don't know what happened there. Uh-oh. There we go.
NSA just cut you off.
Yeah. If you're trying to take setups that are in the right or the wrong market conditions, yeah, that's where you get those fake outs. So the only way I like to take a trade is I go, okay, this is the market condition. This is the trade setup that works for that market condition. This is what I need to see for an entry, which includes risk to reward, which includes, what is the trigger for the entry, and then comes management, right? And then 50% of the equation is actually in management, right? You have the trade entry, and then you have everything that happens after that. So,
yeah, another question is, how do you tell since we've been so long to see a bull trend coming? Well, the simplest way to determine bull or bear is the instant we start to create some higher highs and higher lows on
yeah,
Bitcoin, we're in a bull market.
yeah,
Like
it's all about market structure, isn't it? Yeah,
yeah, like you'll notice that in all of 2018 and 19, we have not produced a single higher high,
yeah,
right? It's all been lower highs. So the instant we start to produce higher highs on this chart, by technical definition, we can call that a bull market again.
yeah, yeah.
Higher highs, higher lows.
This is the most clear bear trend you're ever going to see. With all these lower highs. But let's say that today is the bottom, right? And then the market does something like this, and then we actually break and make a higher high and then hold a higher low. Just by the most simplistic technical analysis definitions, that is a shift in market structure. So that's the first sign.
Yeah. Martin's saying some alts are starting to produce higher highs like Strat, and that's an interesting point. So it is definitely worth looking at alts, because one thing that could happen right now, because we've been so incredibly hyper correlated to Bitcoin, and Bitcoin has been so choppy and the volatility has shrunk, it could happen that alts will start to decorrelate. We haven't quite seen it yet, but eventually, when arbitrage, basically right now, arbitrage bots are dominating the altcoin markets, and probably not like just Mickey Mouse position size. We're probably talking about, whale size positions and arbitrage bots, because the effects are immediate,
Mm-hmm.
right? So what could end up happening is if you get more liquidity, new money coming into alts, let's say they get bored of Bitcoin, or like, you know what, Bitcoin's just chopping around. Maybe it's being dominated by high leverage algos right now. Perhaps some of that new retail money that comes in start to pour into alts. That's where you can get a decorrelation of possibly alt season. Hasn't happened yet, but it's certainly something worth paying attention to and watching for.
Mm-hmm.
Strat still seems very much within, looking at that chart, still seems very much within a low range.
Yep.
And it hit resistance at prior support. So that could be an accumulation. pattern right there. In order to confirm a bull trend, it would have to break above its previous swing high.
Yep.
That previous point where you had this, the prior support turn resistance, it would have to break out of that resistance range and perhaps start to produce a higher low, maybe a throwback on that.
Yeah.
Then we can start to maybe see it's in a bull trend. But right now, Strat might be an accumulation range, but we don't have a confirmed bull trend yet on that.
I'll tell you what I like about this chart is we've done 100% retrace of the boom, right? So the bubble cycle, which look, this was right in line with the alt boom of the spring, right? So a lot of coins did this, and then this was kind of the Bitcoin blow off. So what happened is we've been in the fifth phase for a while now, and we've actually started to use this as support. So I agree. Like this is the first time that I'm actually like kind of interested in this chart ever since it went parabolic. And so here's the thing, like fundamentally, I'm not exactly sure what's happening with Strat over the past couple of months. So that's one thing that we would want to check just to see what's happening. The other thing is, this is kind of the first sign of a pop right here, right? So if we zoom in a little bit on the Bitcoin chart, what I would look for is a snap. Like if, say, this holds a higher low and then it breaks up above this price level, that would be kind of confirmation of a shift. Right now, obviously anything could happen. It could pop and then flop, but that, to me, that would be the first sign of a shift. Because we had kind of like the first run and then a fade. What this could do too is it could just go flat into accumulation for several months, right? So that's another possibility. Or if, say, the project fails or they run out of money or something fundamentally happens, that could obviously just fade to zero. So because of those two potentials on the bear side, to wait for confirmation, I'd want to see something like that. And then what I also do, so I do look at the Bitcoin charts, but I tend to look more at the USD charts to get kind of an un-Bitcoin biased view of the chart.
Yeah.
Right.
Definitely.
Is that how you'd say that, Rock? Is like uncorrelated to Bitcoin? Like,
yeah, definitely. Like there are so many crypto traders that are so rigid and dogmatic about, I only trade the Bitcoin charts, blah, 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 blah.
Yeah.
Well, obviously that didn't work very well for those traders and the peak parabola in 2017, 2018. Because USD charts were king at that time. You want to preserve your fiat value. But definitely it's good to look at the fiat.
Yeah.
And I love looking at the fiat values predominantly because, number one, that's what we're calculating all our freaking accounting with and business, taxes and all that shit and paying the bills and anything like that. It's the actual true measure of if you've really made profit in the trade or not.
Yep.
And one has to be multidimensional. I'd say it's not a question of this or that. In order for me to feel truly satisfied in a crypto trade, I have to make gains on both charts. It has to gain in the USD and the BTC chart. So it's a little bit more multidimensional than maybe some other markets that are only priced against fiat, because like crypto to crypto trading is some very high level shit. Like, Zach was saying that, the only time you see that level of accounting is when hedge funds are trading stocks to stocks.
Yeah.
It's not something that retail investors are really used to. So it's some pretty high level accounting. And whereas in crypto, retail investors are just kind of like expected to understand and figure out that higher level accounting. So for me,
or you could be like McAfee and just go live on a raft.
Yeah, you can live on a raft full of Dogecoin.
Man, that seems like such a low stress lifestyle, just running from the law all the time.
Yeah. So I'd say it's both. I always like to look at both, because obviously, like, you could be up in USD and down in BTC. If Bitcoin's on a run, there's opportunity cost. To me, that's not a true winner either.
Yeah.
So for me to have a real winner in crypto, it's got to gain over Bitcoin, and it's got to gain in USD, and then I feel satisfied and it's hit both of my check marks. Otherwise, anything other than that, I consider like a half winner. Like if it gains in Bitcoin but loses in USD, that's technically a loss,
Yeah.
but it's like a half loss. And if it gains in USD but loses against Bitcoin, that's technically a win, but in my opinion, it's only a half win.
It's an opportunity cost because you could have made more just sitting in Bitcoin.
Exactly.
Yeah.
Exactly.
So going back to like talking about the difference between like a BTC and a USD chart on an alt, what I'll look for is a correlation. So if I'm looking for like a breakout, for example, like I'd look at something like this. So we could say, okay, well, here's our first pop. And a lot of times, like the BTC and the USD charts will look fairly similar unless it's completely disjointed from Bitcoin. But like for this, I'd say, okay, so for this market to shift, the first sign of confirmation would be a break of this level. And then you can see that kind of correlates with about $2 on this chart, right? So if it held up and then it broke 2, I would probably look for the first pullback. And just like I said on the hot chart, right? It's the same thing. You get the breakout, you get the pullback. Once you see that that's holding, that would be the first sign that a shift could be coming. And then obviously a 1, 2, 3, 4 breakout above that would be even stronger confirmation. And then you could add to that. So that's just kind of how I think of those things is look at both of the charts. If you see one that's more clear than the other, you could lean into that one. But at the end of the day, you also, as we've said several times today, you also want to think about what's happening with Bitcoin. Because like we said, like if say Bitcoin dumps to 2,000, say it's down 40 or 50%. Oh my God, the world's going to hell in a handbasket, right? What I would look at is any other alts that I was looking at. I'd say, okay, well, what's Strat doing compared to Bitcoin? And if it kind of like, if it went up a little bit or it stayed flat, and then I started to see like the USD value coming in, I'd say, whoa, what's happening? Does that mean that people are selling Bitcoin for this altcoin? Right? Or is there capital coming in from somewhere else because it's moving inverse to it? Right. So that's just a thought process that you want to have. Is like anytime you're looking at an altcoin, say, what is Bitcoin doing or what could it do in the near future? And how might that affect my position in this altcoin?
Exactly. And if you get a breakout on both charts, BTC and USD, that's confluence, which increases the probability of the trade.
Yep. Then that's what we call a positive sum game, which is what we've seen over the past like 10 years in Bitcoin. You know, in some markets, you have what's called a zero sum game or even a negative sum game where like if you're going to day trade like the futures markets, like the stock market, you know, the ES, the S&P 500, if you make $1, then somebody probably lost $1 and vice versa. Where in crypto, because it's growing as a whole, because the market caps are growing, that means capital is coming into the crypto economy. So if you make money, you don't really have to feel bad that you're like taking it from somewhere else. Like it's a positive sum game. There's money coming in. You can make money. I can make money. Like the capital and wealth is being created. That's why I really like investing in startups. And I look at a lot of these altcoins, the good ones at least, that are doing something real. I look at them as startups and I say, hey, I will invest, I will trade, I'll get in early, I'll take some risks because those people are building things. They're going to have a net positive effect on the crypto economy. That's just how I think about it. So yeah, exactly, Kat. Cool. So David says he's hearing people talk about theories of like timing for the market cycle. Yeah. So we've talked a little bit about this a couple weeks ago, just like projecting out into the future. Obviously in 2020, I think May-ish 2020 is when we're going to have the next halving. And at least over the past few halvings or a couple of halvings, we've seen the phase 2 start 6 months to a year ahead of that. So that's it. I mean, whenever, like for me, it's difficult to predict more than a couple of months out because fundamental things can change things that we can't really predict today. So, I mean, yeah, I've run a couple of those calculations. I know a lot of other people are just trying to come up with timing, but at the end of the day, like, nobody really knows. So that's kind of, it depends, Kat. There's not an exact date, but I believe it's somewhere close to, let's see. I think it's, if you go to Bitcoin Block Half, yeah, here it is, bitcoinblockhalf.com, the estimated date is the 25th of May. So if we just use the calculations that I posted in Discord a month or two ago, plus this, that means that according to that timing, if the market respects the 2.5 times growth of the market cycles, that means that I would expect in somewhere mid this year to start going back into phase 2. And again, there could be a black swan event that causes that to happen sooner or later. But that's kind of just based on the information we have today. That's kind of what I'm looking at. And you look, yeah, like things like the ETF could change that, right? Like say the ETF got approved in 60 days, or, you know, say that, you know, there was a major issue with a world economy or something. Like there's so many variables. This is like a global market, right? So like it's really, really hard to predict out that far.
Absolutely. And what's interesting is that Bitcoin block halvings do tend to have some level of predictability, or at least historically anyways. Mm-hmm. A lot of those cycles have been timed to it. Sorry, I keep getting booted off because my internet card's
Yeah. Yeah, Happy Wealth. He said, I saw an interesting overview of Bitcoin using 4-year market cycles, feeling that it could go up 10x from the last high. Yeah, you know, I mean, there's these crazy, we call them crazy, right? These predictions or these ideas that at the time seem unachievable, right? Like in 2015, when we were looking at, you know, $250 prices, the thought of $20,000 Bitcoin was possible, but we were like, is that really going to happen? You know, like what would have to happen? Like, oh, we'd have to have mass adoption. We'd have to get on CNBC. We'd have all these things. Well, guess what, guys? It freaking happened, you know? So I don't discount any possibilities, especially like outlier scenarios. Like, I think Nassim Taleb said this, there's a high probability of some low probability event happening, right? There's all these low probability things that could happen in the world, but there's a high probability that one of them is going to happen. So that's
absolutely.
Yeah, that's why I love investing, because you never know. I mean, I made an investment in a startup that I'm like, dude, I'd be lucky if these guys got a $20 or $30 million valuation at the next round. They just raised it over $100 million valuation. And this is traditional venture capital. And I'm like, oh shit, that's great. You know, but you never know what's going to happen.
Nice. Yeah. And that's why I also like to have some good size positions and decent alt projects, because I feel like market cap wise, if Bitcoin does break all-time highs, I might get some higher percentage gains, or it seems like there could be, if you pick the right one, higher percentage upside.
Yeah.
Obviously, like for Bitcoin to hit 100x, let's say, from current levels, well, you know, you're looking at hundreds of thousands of dollars,
yeah.
right? What are the probabilities and possibilities of that happening? Certainly possible, but look at Bitcoin in 2015. I'll give you folks an example of opportunity cost. I made 100x multiple off my Bitcoin investments from 2015. Bitcoin was my largest position because I felt it was the safest. But there was an opportunity cost. I could have made, instead of 100x, I could have made 1500x if I had gone in a lot heavier on Ethereum. But how would I have predicted that? Mm-hmm. Right? So the
Well, and Rock, to your point about opportunity cost, that's why I think we don't have to be like there's a benefit to not having to be all in or all out on accumulating one asset, right? That's why I think it's important to have different capital buckets where you're like, here's my accumulation play, but I can juice those returns by actively trading too.
Absolutely. That's why I like to spread out and diversify a bit, even though Bitcoin still to this day is my largest position. And David's interesting point, he says, or zero. And that's right.
Yeah.
Right. That's like if you chose the right coin. Mm-hmm. What if I felt like WorldCoin was the future and put a big significant chunk of my Bitcoin into WorldCoin and then it went to zero? Right?
Or if you accidentally bought BitConnect thinking it was Bitcoin because of some scammer at the water cooler.
Exactly. Yeah. Oh shit! I thought I was buying Bitcoin. It turns out I went all in on Bcash. Shit.
But I paid $9,000 for Bcash or something.
But Coinbase said that was a good price. Anyway.
Oh, Bevo, wait, which one? With the storm? Which one did you buy?
Which one did I buy?
No. Storage. Oh, okay.
Oh, Storage. Oh, that's right. Storage. Yeah. Did Storage make crazy games like that? I don't think so. I mean, it was a tough one.
Actually,
remember XRP? It made some gains, but not that great. Or what about
Ripple? Was one of my best trades ever, actually.
Which one?
Ripple. You're talking about XRP, right?
Oh no, sorry, not XRP. Counterparty. XCP.
Oh.
My bad. Not Ripple. Yeah, no, Ripple
XCP.
went nuts. Yeah, XCP. Right? That didn't perform as well as some other things, but it was like the Ethereum competitor back in 2014, right?
Mm-hmm. Or Mastercoin, that was the first one.
There you go, Mastercoin, right? What happened to Mastercoin and some of these other ones that were BitShares? I mean, some of them gained, but they didn't gain nearly as much as some of the other ones.
That's when the term was, what did they call them? Colored coins.
Exactly.
I'm talking about layers and, yeah, I remember the BitAngels group here in Texas, they went heavy in Mastercoin, if I'm not mistaken.
Yeah, now it's like an illiquid shit coin, right? Mooncoin, I remember that. That coin's completely dead.
Yep.
So obviously this is where fundamentally why I personally, with altcoin investing in new projects, I try to pick what I feel is the best tech on a fundamental level and the best development teams and stuff on a fundamental level. Obviously, I'm not a developer or hacker, so perhaps I might have some limitations on a fundamental level that they would have over me. But I've also outperformed and have understood the crypto markets better than some hackers and programmers as well. So you could also get quote unquote fundamentaled in crypto if you're not looking at the technicals on the chart. So this is where it's good to have the balance between the two instead of, it's always this debate, technicals are better than fundamentals, and then some people think fundamentals are better. I say it's all in context. I find fundamentals show me what coins have the highest probability of survival into the next cycle, and then technicals show best entries and exits.
Yep, exactly. Good stuff, guys. Any other questions, comments? Yeah, Don, I saw, Tim made his next prediction of 200K. That's another one of those scenarios of like, okay, what would that look like if that happened? In my opinion, there would need to be like a global financial crisis and like fiat would take massive hits. Is it possible? Absolutely. Is it probable? Man, we're talking about one of the most, probably next to like an asteroid hitting Earth, like one of the biggest like transfers of wealth, right? So I don't know. We're here. We're prepared for it. I'm definitely not going to make that prediction myself, but
I think if we saw 300 million plus users come in to Bitcoin,
which is what 20% of China's population. And 20% of India's population. So who knows?
Yeah, then it's like a supply and demand dynamic, right? Because if you had, let's say, a few 100 million more people coming in, we get a little bit closer to market saturation. which is the point that no more participants would want to use or come into it. There's only a limited supply that would drive up the price. But one factor that we have to think about in that supply or demand scenario is how much of that demand, buying demand, would be absorbed by futures.
Mm-hmm.
Because futures kind of skew the supply and demand ratio of Bitcoin. Bitcoin is limited to 21 million coins.
Mm-hmm.
That in and of itself is very bullish supply and demand fundamentals. However, there's no guarantee that just because 300 million new users come in, that all of those new users would actually buy real Bitcoin. Some of that money would get absorbed into the futures market just to speculate. We already see it in BitMEX.
Yeah.
Right? BitMEX is currently pushing the highest volume than any crypto exchange in the world. And it's all synthetic volume. It's not even real supply.
Well, here's something interesting. So there's only ever going to be 21 million Bitcoins. Right now there's 17.5 million. There are apparently about 36 million millionaires in the world. So what that means is, like, if every millionaire wanted one Bitcoin, there wouldn't be enough, right? There's not enough Bitcoin for every millionaire to own one Bitcoin. That to me is pretty interesting.
Absolutely. And it just has the ability to serve so many different economic niches.
Yeah.
That's what also makes me bullish on it. Whether it's serving the 2 billion unbanked that can't get or are prejudiced or can't get access to good banking,
Yep.
or whether it's escaping capital controls and very rigid nations. Or that could be wealthy Chinese people escaping capital controls, getting their money out, like we've seen before. That could be, middle class Venezuelans trying to preserve their capital by going to Bitcoin when their currency is being devalued. Or it could just be, a Wall Street hedge fund just want to speculate.
Yeah.
Right. There's such a wide array. It can be so many things to so many different people. Or it could be techno freaks, people who love the technology. People want to build on it, right? There's just so it's so malleable. It's not just one thing to one group of people. It can be so many different things because it's a network.
And talking about Venezuela, Rock, I don't know if you saw this. This happened yesterday. Basically, Maduro's about to get ousted, it seems. So Trump backed the new guy. This guy is now going full force, like hammering protesters. So, like, it seems like we're kind of at a tipping point there.
You know what's ironic? I saw someone tweeted today. This is very ironic. Says the U.S. has been in an uproar about Russia meddling with U.S. elections, and yet the U.S. meddles with the Venezuelan election just overtly.
Yeah. What's interesting is this is kind of looking like somewhat of a proxy war potential, because you got Russia saying, "Hey, leave Maduro alone." So I don't know. This is pretty interesting stuff. I don't know. I know we just feel bad for the people down in Venezuela, and we have several community members that are either still there or were there. I'm not really sure, but I know that this is definitely a use case for why crypto is important.
Yeah, it's the whole old communist versus capitalist battle all over again there.
Yeah.
And every country is kind of like somewhere in between communism and capitalism, including our countries. But I mean, obviously their economy has failed, and many communist economies fail, right? Because they're too highly centralized. As much as some people hate on capitalism, one of the interesting elements to it is there tends to be a little bit more decentralization in the markets as far as entrepreneurship and stuff, right?
Yep.
It's you almost need excessive centralization with communism, excessive central management on all commerce with communism. And obviously, like we've seen even that push even in Western nations where the governments just really meddle in business, maybe even a little bit too much, right?
Yep.
But that's a whole other conversation for for another day.
That's a conversation for drinks in Cayman.
Exactly. Now, hopefully, whatever comes of Venezuela, hopefully it betters the economic situation of the people there, because I genuinely feel for them.
Yep.
That's a very tough spot to be in. So whatever happens, I just hope that it raises their standard of living.
Yep. Good stuff. And on that note, we will see you guys in Discord. Hope you guys enjoyed today's class. And we'll just keep focused on this price zone, and hopefully we can get some action here in the near future.
I have a prediction. Next week we'll chart at $3,567.35.
Play credit
some
spreads.
Sideways. And because I said that so boldly and confidently, we're going to get a big move.
Yeah. On your flight back to Canada, by the way.
Exactly. In the middle of my flight.
Yeah. Good stuff, guys. All right. Have a great weekend, and we'll see you guys in Discord. Thank you, guys.
Take care.
All right. Have fun, Rocky.
Cheers.
Don't get too relaxed and forget to come back to reality.
All right. Thanks, Chris. Thanks, folks. Take care. Cheers.